Hello everyone, my name is Michael Corgiat and I am one of the Caterpillar focused retirement advisors here at the Retirement Group. Welcome to today's presentation. We at the Retirement Group focus on working with employees of Fortune 500 companies like Caterpillar, helping those employees to achieve a successful, happy, and comfortable retirement. We offer a number of different services, one of which are these on-demand webinars, where these webinars are here to help educate you on different subjects and different ideas, as today we're going to talk about the CAT pension plan. We maintain a library of these webinars, and you can find that both on our LinkedIn page as well as our YouTube page. I'll talk about both of those in a minute. But the on-demand webinars are just one of the many resources that we offer folks like yourself. We also maintain a library of ebooks library on all sorts of different subjects. A couple might be Social Security and estate planning. We maintain both a blog and a newsletter. You can reach out and get our Caterpillar Retirement Guide. It's a very comprehensive guide that we have put together for Caterpillar employees. You just have to reach out to our office, and I'll provide both the number and the email address here at the end of the presentation. And probably our most proud resource is our cash flow retirement, our retirement cash flow analysis. We call it our Retire Kit. It's a snapshot of your current financial situation, taking into account what your retirement goals and objectives are. And it will show you where you're going to be when you might want to consider retirement. Now, folks who are considering retirement are better off to have been planning for this sooner rather than later. It's been proven that folks who have begun planning as little as 5 years prior to their determined retirement date are going to be better off longer term than those that aren't. But reach out to the office and we'd be happy to put together one of these Retire Kits for you, and I think you'll really find it helpful. Now, why consider the Retirement Group? We're a team of advisors with a great deal of experience. We've got offices nationwide. We have a very good knowledge of all of your benefits, your 401k, your pension, and your medical benefits, and we are happy to provide you with that complimentary financial analysis. Scan this QR code and then you can follow us on our LinkedIn page to continue to get news and updates for Caterpillar employees. So then you could sign up on our LinkedIn page. Let's go ahead and dive into today's presentation on the CAT retirement plan. First, we'll talk about eligibility and how important years of service, and your salary is in the pension calculation. We'll touch on pension eligibility and then talk about the credited services formula, which I like to call this is the older pension plan. And then we'll also talk about the final average monthly earnings formula, which is the newer formula for pension credits. Okay, pension eligibility. Essentially, you would have had to start at a Caterpillar or a subsidiary prior to December 1st of 2010 to even be eligible to participate in the plan. Now, I know for most of you who may be viewing this presentation, you already know that you have met it and have been participating and are earning pension credits. Okay, but I do want to make sure I point out, and I'm sure again most of you are well aware of this, but Caterpillar froze their pension plan at the end of 2019. So you are no longer earning any credit towards your pension. Your pension's been frozen. But as you age, in other words, as you get older, you are potentially aging out of early retirement penalties, which you can't start your pension as early as 55, with the maximum pension being available at age 62. So you can't age out of penalties, but other than that, you are no longer earning any credit towards your pension after basically starting at the beginning of 2020. As I mentioned earlier, service and salary, years of service and your monthly income are the two factors that are what's going to determine what sort of monthly pension that you're going to receive from CAT. There are 3 different methods for crediting your service. The most, probably the strongest, most important one is the actual years of service and your vested service. I won't get into them too in depth, but bottom line, years of service, once you are eligible, which again, if you started with the company prior to December 1st of 2010, you are eligible to participate in the CAT pension plan. There's a lot of pension eligibility options essentially here. The list here, I'll run through a couple. Age 65 with 5 years of service to participate in the plan. There's no minimum age if you've got 30 years of service. 55 or older plus your vested service. If it equals age 85, then you're eligible. Or age 60 with or older with 10 or more years. Again, for the most part, those of you already know that you're eligible and have been participating and pretty much have a good idea of what your various pension benefits will be, and we'll talk about how they're paid out here in a few minutes. But first, let's talk about the credited services formula. This is what I like to call the old formula or the older formula. It's essentially going to take your years and months of service. So for example, 30 years of service, we'll round it off at 30. That multiplied both by a basic pension rate and then a supplemental pension rate, and those are dollar amounts, will equal a monthly pension amount. It typically produces a smaller monthly pension than the other formula, but not in all cases. So a simple example would be you have earned a monthly pension benefit of $2,000 a month based on your years and months of service multiplied by these 2 rates, the basic pension rate and then the supplemental pension rate. The final monthly earnings formula, or the newer formula, essentially is going to take your final average monthly earnings based on your highest 5 years of earnings out of the previous 10 years of earnings. So essentially from year 2010 to 2020, the end of 2019, your compensation is looked at, and they're going to look at your 5 best years, which may not be successive years because some years you had STIP awards and some years you didn't have STIP awards and some years you had great STIP awards. So it's going to look at your 5 best years, and those 5 best years are what's going to be plugged into the calculation. If you've worked less than 10 years, then they're going to look at the best of the final average monthly earnings over the entirety. So essentially, for an example, got an individual here who is 62 years of age. They've got 35 years of service, which, by the way, is the maximum number of years of service that can be used under the final earnings formula. In the credited services plan, more than 35 years can be taken into account. And I've met folks who have retired with more than 40 years of service. But moving back to our example, here we've got an individual whose final average monthly earnings, their 5 best years out of their last 10, equals $4,000 a month. Their 35 years of service is multiplied by a factor of 1.5% to determine a total percentage of 52.5%. That pension benefit is going to be 52.5% of $4,000 a month, or $2,100 a month. That is the single life annuity that you're eligible for. Remember, I mentioned $2,000 a month in the credited services formula. Both calculations are run. You're going to get the larger of the two. It's essentially the old plan plus the difference between the new plan, but you're going to get the larger of the two benefits. And how are these benefits paid out? Well, they're paid out in a number of different ways. Under the credited services formula, you can get a 100% benefit for yourself, and if you pass on, your spouse can get 55% of what you were collecting. The traditional joint and survivor annuity benefit is a 50% joint and survivor annuity. So if you are married, husband or wife, your spouse can get a benefit it's going to be based on a percentage of your benefit. Now let's talk a little bit about that. The single life annuity is just that. It's based on only your life, and it will be the largest monthly benefit. A joint and 50% survivor benefit means your benefit is going to be approximately 10% smaller than your single life annuity to provide you with a 50% benefit to your spouse. If your spouse predeceases you and you've taken this option, your pension benefit will pop up to the larger single life annuity. There is a year's certain option where you can actually say, okay, I'm single, not married, or my spouse is deceased. I want to get a year's certain. So in other words, you could get a 10, 15, or 20-year certain benefit. And if you pass during that time, depending on which option you chose, the balance of your monthly payments are going to be paid out to beneficiaries, which could be more than likely your kids, but it can be anybody. For example, if you took the 10-year period certain and you passed 2 years into retirement, the balance of those 8 years is going to get paid out to your beneficiaries. And then finally, many years ago, you had an option to take the PEP benefit, which allows you to potentially take a lump sum as well as a monthly annuity. For the most part, most people had to make this election almost 20 years ago. And for those of you who know you've got it, you've got it. Okay? But it is an option. There are lump sum benefits available for a certain few, along with the various annuity benefits. Now, a pension benefit is typically a fixed monthly income. There are no cost of living built into your CAT pension. So if it's $2,000 a month today, it's going to be $2,000 a month 10 years from now and 20 years from now. So you have to keep in mind that inflation will eat into the purchasing power of your pension. And essentially what this is saying is that what you do for yourself away from the pension that you've earned is really going to make the difference between an average retirement and an exceptional retirement. And what I mean by that is what you've done for yourself, i.e. the savings that you've put away into your 401k and any other investments that you've done on the outside, which can include IRAs, Roth IRAs, or just typical brokerage savings, or even CDs, Series E bonds, whatever it might be. All of those are going to be what's going to allow you to keep pace with inflation by what you've done for yourself. Social Security even has a cost of living built into it, but the pension does not. So inflation can eat into the purchasing power of your monthly pension. I talked earlier about planning. 74% of Americans over the age of 50 do not have a written financial plan. Honest to God. Most people will spend more time planning a 2-week vacation than they will for their own retirement. So please take advantage of the opportunity to talk to one of us here at the Retirement Group and let us put together a Retire Kit, one of our comprehensive retirement cash flow analyses, just to show you where you're at right now. Because again, it's a complimentary service. We're happy to put it together for you, and it will give you a baseline idea of where you're at. And if you've done one of these in the past, you should update it, whether it's with us or another financial advisor. Get a second opinion, okay? Talking about working with financial advisors. Obviously, I would look forward to the opportunity to work with every one of you. We do understand your benefits. We are a team. We work as an investment team here at the Retirement Group. So all of us as advisors have input. We have a lot of value that we can offer in a relationship. We get paid to manage clients' assets, but based on all of our experience, I can offer a lot of value in a lot of other areas, such as estate planning, insurance planning, and tax planning. And all of that value comes along with what I get paid to manage your retirement assets. And again, that's how we get paid. You'll notice, fees are important. Make sure you understand what your financial advisor is going to charge you to manage your retirement assets and how they are paid. We don't work for free, just like you don't work for free. So make sure you understand what the fee structure is. And we at the Retirement Group have a very competitive fee structure. And we, as an independent advisory firm, we don't have layers of management that have got their hands out. We work for you and you only, and our fee schedule is very competitive. And then finally, do they offer a detailed financial analysis? Make sure they do and take advantage of it. Finally, scanning these two QR codes. If you scan the one on the left, you could schedule a meeting. It's a complimentary meeting with myself or one of my colleagues. And again, the QR code on the right will allow you to jump to our LinkedIn page and really check it out. Our website, theretirementgroup.com, our YouTube page, and our LinkedIn page are all three great resources. If you've got questions, just call our office at 1-800-900-5867 or send us an email at info@theretirementgroup.com. So that's what I wanted to talk about today is the Caterpillar pension plan. I mean, I could talk a lot more about a lot of different things, but I don't want to bore you. But I do see that we've got a few questions that have come in during the presentation. So I want to go ahead and answer these questions. And I do appreciate everybody providing these for me today. Looks like we've got a couple good questions. The first one is pretty simple. Is my Caterpillar pension adjusted for inflation each year? The answer is simply no, it's not. The pension is fixed. It's a fixed monthly amount that will not be adjusted for inflation. Social Security is, potentially other pension benefits might be, but your CAT pension is not. Another great question here. Does it make sense to take the single life pension option and buy life insurance for my spouse? And if so, why? Well, this is a great question. We call this pension maximization. I mentioned that the single life annuity is the largest monthly pension that you can receive because, again, it's only based on your life. You can provide survivor benefits, but you take a hit on your monthly pension to provide those survivor benefits. In many cases, especially if you're insurable, you can self-insure your spouse's survivor benefit with tax-free life insurance. And the cost of providing that benefit is a lot less, potentially, than the difference between your single life annuity and a survivor benefit. And I'll give you a simple example. A single life annuity of $5,000 a month or a joint and 50% survivor annuity of $4,500 a month for you and $2,250 a month for your spouse. That's a $500 a month hit. Well, there's a good chance if you're insurable that you could self-insure that option for your spouse and pay for it with a fraction of the difference. If you want to look into this, please just let us know by reaching out to the office, and we'd be happy to put together a pension maximization illustration for you. And then finally, I've got one good question here, our last question. How well funded is the pension plan at CAT, and is it insured by the U.S. government? Another great question. Well, I do know that the CAT pension is well funded. Even though it was frozen, CAT made that decision as a corporation, but the plan has plenty of assets to pay out as far as its vested benefits to all of the CAT pension eligible employees, both currently working and retired. And yes, it is insured. All pensions are typically insured by the PBGC, which is the Pension Benefit Guarantee Corporation. So your pension is protected by a governmental agency if by chance the CAT pension plan assets get into trouble. Thank you. Those are our questions for today. Again, I want to thank everyone for joining us. I really appreciate your time and attention. I'd look forward to speaking to all of you. Have yourselves a great day. Thank you.